Gurgaon's property market a house of cards, ready to collapse with a small push? Is a price rise of 300% since 2021 that Gurgaon has seen too much, too soon? Very, very hot market, everyone's saying. Should you stay away from this overheated market? Now, there are influencers saying something, there is fear gripping the market, but does this fear have a solid base or is it just a theory? What are the numbers saying? Because let's get real, numbers rarely lie if you analyze them honestly. So let's do that for you with the person I trust with research, numbers and data, Samir Jasuja. He's a founder of PropEquity. Samir, good to be with you after a very long time.
Pleasure to be here, Manisha, and would love to talk about the most hot topic in the country today, which is Gurgaon going to crash or not?
Gurgaon going to crash or not? So let me ask you, that one big number that everyone's talking about is run up too fast, 300% price rise. So it has to cool down.
So Manisha, you have to first understand the NCR market and especially the Gurgaon market and what has actually happened over the last 15 years and not just look at the last 4 years. So Gurgaon as a market launched 21,000 units on an average from 2010 to 2012. And that time, so roughly about 60,000 units in 3 years. And from 2014 onwards, right up till 2020, the supply came down by 80%. On an average, it was launching only 3,000 to 4,000 units a year.
So in 7 years, let's say the period that you're talking about, here's a chunk. And we'll pull up the graphics for it. So you had 55,000 to 60,000 units which were launched between 2010, 11 and 12. And suddenly we see this dramatic drop. And in 7 years, we actually see an average of 2,500, 3,000. So that's 21,000. That's less, almost 1/3 of
so
launches.
As you rightly said, first of all, God is in the numbers and you really have to analyze the numbers well to get this right. So 60,000 units in 3 years and 20,000 units in 6 years. So it's like a 1:6 kind of a ratio. And that led to a complete starvation of supply in the market. Secondly, the NCR population is 33 million. And
But that is NCR.
That's NCR, and I'm coming to that. Delhi and Noida has hardly any supply as well. So all the supply that really comes in the primary market comes in Gurgaon. So really speaking, when we talk about the demand-supply dynamics, a market that has not seen any supply for 7 years had to witness a price rise of 300 to 400%, which was logical compared to other cities in India where the supply was continuously stable at 50 to 60,000 units at 1/3 the population.
Even post demonetization?
Even post demonetization. So if you look at Pune, Thane, Bangalore, they were averaging between 50 to 70,000 units a year with a population of 10 million. Compared to the population in NCR, and like I said, the market completely dried up. So you saw 33 million population and 1/4 that supply. So that is a scientific, rational reason why prices in Gurgaon rose much more than the prices in other tier 1 cities. So there is no reason to get scared.
So here's my... But even then, real estate has always been a cyclical industry, Samir, if you look at it. While these markets may not have seen a drop in supply, they all saw a stagnation of prices around the demonetization time. How do you justify something going up so fast?
Yeah, so first of all, you need to understand 3 things over here. One is the most important piece, as I discussed, the demand-supply dynamics. The second piece that you need to understand is the employment generation that happens in a particular city. And the third thing is the social infrastructure, right? Now, when you look at Gurgaon as a market, which roughly where you see all the action is happening only in 30 kilometers, right? Where all the launches are happening and where all the people are already living, more like Dubai, right? Which is supposedly 3,000 kilometers, but everybody lives within the 30-kilometer radius, right? If you look at Gurgaon as a market, it is probably one of the best markets that has all the 3 attributes. Nobody knows, but NCR really is the second largest commercial office space market in India. People think it's Bangalore and Hyderabad and Chennai, and that's really not the case. NCR is number 2. Secondly, when you talk about the social infrastructure, the proximity of Gurgaon to the international airport, and we all know that the international airport gets the maximum number of tourists, maximum number of people who fly into the country is in the Delhi International Airport, right? So the social infrastructure, whether it's the metro, the best hospitals in the country, the best international schools in the country, and you have the international airport half an hour away, makes Gurgaon the best city in terms of proximity of infrastructure that is so close and running for the last 7-8 years. And not only that, you have Cyber City, which is like the BKC of India, right in the heart of Gurgaon city, within that 30-kilometer radius,
So
where
employment
employment
generation.
generation is happening.
And there's been new infrastructure which has come up. You have new markets opening up like the
Yeah.
SPR.
Absolutely. The Cyber City 2 is
Golf
coming
course
up over
extension
there.
road.
And Golf Course Extension has always been around for the last 8-10 years because Golf Course Road was completely, had no supply whatsoever. And the biggest factor that is working for Gurgaon is that you have Delhi right next to it, which has no supply.
No supply.
So if you were to compare this to, say, an MMR, right? Mumbai still has 40,000 units a year coming in, and the affordable audience goes to Thane, which has 80 to 90,000 units coming in over there. Whereas Gurgaon benefits because Delhi has 2,000 units coming in there in a year. So all the demand of
West
Delhi,
Delhi, North
which has
Delhi
20 million out of the 30 million
is also
population,
coming in.
is wanting to buy in Gurgaon. And also because the traffic situation in NCR has become so poor and there is a pollution issue, everybody wants to walk to work or be close by to work, right? And that also works very well in favor of Gurgaon.
That I agree because Central Business District is here and I do see
80
my
out of
son
the
struggling
100
every day. But
multinationals, yes.
thanks to the metro, he's coming from Delhi to Gurgaon.
Yeah.
All right, I'm going back to your number. So this interesting block that we've shown people of almost 60,000 units between 2010 and 2012. But Samir, there was so much supply in that time that I also look at the numbers and say by 2014, the inventory overhang, and you've taught me what inventory overhang is, honestly, reached a high of about 40 months going right up to 2016 to 50 months, which means for one unit to say sell, it takes up to 50 months, right? And you've always said more than 24 months, the market starts looking worrying. So here's my question. Now, last year in 2024, you had the highest supply, which surpassed 2010 supply. If the supply continues, are we not going to reach a situation where there will be an inventory overhang? And that's when builders start decreasing their supply and launches because they see so many unsold units. How are you so confident that will not happen again?
So, I'll share two very interesting dates of real estate and compare it to the two interesting dates that I think are of India, which were game changing. One was, for example, for India, it was the independence in 1947, and then there was 1991 where liberalization happened. Similarly, real estate has two big dates. One is 2010 or 2008 or 9 when FDI and real estate opened up. A lot of money came in, and that money led to a lot of launches. And there was an exceptional amount of launches in NCR. Imagine NCR and Gurgaon. That time in 2010, NCR launched 150,000 units when rest of the cities were at 50,000 units. When the second big date is 2021 or 2020 post-COVID, where the real estate markets finally turned around after an 8-year lull. Right? So these are the two most significant dates after real estate became institutionalized, starting with 2010, and it has taken 14 years for this market to get steady and institutionalized, and the bounce back happened after 2021, right? So now when you look at it, there were two significant differences between the oversupply situation that got created with the high inventory overhang. This is a classic case study how real estate is a science and not, just an art or a gut-based thing. You had much higher supply and much lesser demand in the first uptick of real estate, which was 2010 to 2012, when supply over exceeded demand. So there was an inventory overhang. Over and above that, most number of developers defaulted and they couldn't execute. So that led to a double whammy. Oversupply, less demand because of so much supply, and developers not being able to execute, leading to end users losing confidence in the market, and so the investors as well. That led to the fall in supply. That led to lack of deliveries. That led to that 7-year lull period. But because of that 7-year lull period, the real estate markets also in terms stabilized. Those projects that were not getting delivered went to NCLT and saw some respite. The Swami Fund was set up during that time, and the investor confidence came back.
came in.
The RERA came in. There were many positive things that happened for the industry that led to the resumption of confidence both for the investors and the end users. And then COVID was that magical moment where
That we all
everything
know.
turned around. So the difference between the second date and the first date is that for the first time, because of the shortage of supply, the absorption far exceeded the supply. Whereas in the first phase, the supply far exceeded the absorption.
All right.
And thus the price rise, thus the 300% appreciation because of lack of supply, because there were more demand than supply, and that's why the prices rose.
Okay, so I have seen the data, and at the end of 2024, in Gurgaon, inventory overhang is 6 months, which essentially means it's extremely healthy. Everything is selling, right? Going forward, and it's PropEquity report which says that top 9 cities sales velocity in April to June has slowed down for the first time since 2021 for top 9 cities. But somehow you say for Gurugram there's been no slowdown. There are other reports which claim otherwise, right? And I don't want to name anybody else. They say that all markets have slowed down. No nervousness at all in Samir Jasuja right now with Gurgaon
again,
market.
I will, as I say, God is in the numbers, and I'll back that with data.
So
right?
let's break it down in simple terms.
So first of all, the historical high that Indian primary real estate has ever seen has been in 2023, when for the first time in India, the top 9 cities launched 481,000 units.
We still launched less than 5 lakhs, which is a very
Yes,
small
but
number
the
compared
good
to
news
globally.
was the absorption crossed 5 lakh units. The highest ever in history before that was 2010 at 430,000 units. So it took us literally 13 years to break
back.
that previous high, first of all. Then people started getting worried in 2024 because the supply and the absorption came down from 480,000 units to 410,000 units. So the whole market started fearing because they saw a 480,000 number, they saw a 410,000 number, drop of 20%, and they thought the market is crashing. But they didn't break down the numbers. So this drop was 70,000 units, and that was attributed by 3 cities and 3 cities alone: Hyderabad, Thane, and Pune. And you know, as I talk about the tier 1 cities, I talk about the tale of 2 cities. And here I'd like to bring about Hyderabad versus NCR, and rest of the cities have pretty much been consistent. So if we talk about Hyderabad, Hyderabad had only 20,000 units launched in 2010 when NCR was launching 150,000. That 150,000 number came down to 20,000, and this 20,000 number went up to 90,000 in 2023. So, and it went up from 70,000, 80,000, and 90,000. Imagine in 3 years, Hyderabad launched 270,000 units, which NCR didn't launch in 15 years. Right? So look at the oversupply that period. And that's why 2024, that number had to come down to 40,000 units.
Yeah.
So just these 3 cities came down by 90,000 units. And guess what happened to NCR and Gurgaon? It went up by 54%. And all backed by absorption. So please note that supply was just not oversupply getting created.
Okay.
So when we have absorption, which has gone up consistently, I'm talking about post-COVID numbers, 8,000, 11,000, 18,000, and now 21,000, right? So that 21,000 unit number is still not very high because the absorption is supporting it. 21, 22, 23 absorption was higher than the supply, and the supply was not really very big. When you look at Gurgaon and you look at overall
and
NCR,
in 2024,
it's the absorption has come down, and there's a reason behind it.
Okay, and that is why I'm asking, why are you now saying that they will not? If the absorption has dropped a bit below your supply, are you not beginning to get some nervousness?
So you need to understand and break Gurgaon down into 2 buckets. One is 0 to 5 crore bucket, and one is above 5 crore bucket.
Okay.
Okay. So when you look at the 0 to 5, and overall, as we
Zero
discussed,
to hai nahi. There's
this-
a death of
okay,
a
so
crore
2
in
crore to
Gurgaon.
5 crore
You get me
market.
something for a
Say
crore
2
also. I'll
crore
be
to
very
5 crore
happy.
market.
I'll buy 2 units for my children.
I'll get you a 1 bedroom less than 1 crore, but that's all I'll be able to get you, right? Because the sizes over here are big.
I'm calling it death of a crore in Gurgaon.
Okay,
Your
fair enough.
market that you love so much, Samir, and for right reasons, of course.
It has
At
been
least by data.
the best market in India for 24 years, consistently on a compounded annual
You
basis.
just told us for 7 years it was a dead market.
No. I am saying slow down, but when you look at a 20 or 4-year period, the compounding of Gurgaon has been at 12%, whereas the compounding in any other city in India has been less than 7%.
Okay, so let's come back to this particular point of dividing the market
Yes.
above 5
that's a
crore
very
and below 5
important
crore.
point.
And I think everybody, even the developers, with not on record but off record, are saying that sales velocity of apartments priced at above 5 crores has slowed down across.
And that's natural, because let me share some hard data points with you. So India above 5 crore market is total of 19,000 units, out of which 9,800 came in Gurgaon alone.
My God.
1,60,000 crore market of all India above 5 crores, 80,000 crores just coming out of Gurgaon in the last one.
More than half.
Right, more than half of all tier 1 cities put together. And the so-called market called Mumbai, which is the luxury market or the most expensive market of Mumbai, is 1/3 of Gurgaon, 3,000 units only, right? So naturally, when in a market which did not see, which only 4,000 units above 5 crores in 2023, which was the historical high, goes to 9,000 because of demand. If there was no demand, the market would not have gone and launched 9,000 units. Developers are not stupid here. And I'll back it up with one very important point as well. Pan India, the average size post-COVID in Mumbai has dropped by 1%.
Yes.
It's remained at 1,200 square feet.
Yeah.
Whereas Gurgaon has gone up from 1,800 square feet to 2,600 square feet. So if there was no real demand in Gurgaon, the developer was not stupid. He would have kept the size at 1,800 square feet to keep the ticket price low.
Okay.
Right. So he increased the sizes because he was seeing absorption even at 7 crore levels, 6 crore levels, and even 9 crore levels. The last launch of DLF is at 9 crores plus. We're talking average 5 crores.
Okay.
Right.
So but is that market now beginning to lose steam? Do you agree
Yes.
with that?
So the question is that there's one more important thing that you keep in mind, that a lot of NRIs have bought in Gurgaon, and they are long-term investors, right? So that market has slowed down because it's a black box. No city in the country ever has seen launches and absorption to the tune of 9,000 units in 1 year above 5 crores.
Yeah.
And we're talking about 80,000 crores of real estate.
Yeah.
There are only 3 markets in India that are above 1 lakh crore, which is Gurgaon, Bangalore, and MMR and Mumbai. Out of which 80,000 crores is just coming in Gurgaon from luxury above 5 crores.
Got that point.
So that market naturally has to slow down.
Okay.
And the developers are more than fine with it. I'll give you a reason behind it. If you launch a product in Bangalore above 5 crores or Mumbai in 5 crores, the developer is more than happy to sell his entire inventory in 2 years. Whereas in Gurgaon, if the project is not sold out in 1 week, the brokers term it as the biggest failure. So the developer is under a lot of stress, because if he does not show 100% sale in 1 week or 2 weeks, he will have rumors and the influencers will saying that the market has crashed. And as you know, that fear sells the most, and social media influencers will get the maximum views if they sell fear. And they don't care about the numbers. They don't come from real estate.
So you brought in the brokers.
Factor.
You brought in the
I'm
brokers.
talking about influencers.
No,
I'm not talking about
influencers are
brokers.
fine.
Right?
Influencers are
I'm
fine.
only talking about influencers.
I
I'm
agree.
not talking about brokers here.
No.
The brokers have made the maximum money in Gurgaon ever. Right? And they continue to make it. And the developers are more than comfortable because they have 2 years to sell. So this unfound pressure created by the influencers makes them panic a little bit. And what they should be selling over 2 years, they're trying to sell in a week's time.
Okay. Now this whole thing about single day sales and 1
I'd
week.
just like to make one
All
more
right,
point.
go
We
ahead.
were only talking about the 5 crore plus market.
Yeah.
The under 5 crore market is so starved, and there's a
it is
population
terribly
and
starved.
demand supply mismatch of NCR compared to other cities by 5x. And now let me give you the numbers. For example, NCR has 33 million people and 45,000 units launched. Bangalore, and if you combine Bangalore and Hyderabad, it's 1,50,000 units with 20 million people. Or if you combine MMR and look at MMR, 150,000 people, 150,000 units with 20 million people. So if in Gurgaon, because Gurgaon is the only supplier of real estate in the NCR market, if you come out with 2 to 3 crore products like there are in other cities, there's 1 lakh units will get sold in 1 year, and I guarantee that.
Okay.
And there is no supply.
But there is no supply.
Because the land value is more expensive. And because real estate is selling here. So selling at 5 crores and above, so why should the developer launch at 2 crores?
But you're saying 5 crores is likely to slow down. But I have another
Of course,
question.
rightfully
There
so,
is this
right? It should slow down a bit because
Okay.
it is bigger than all the tier 1 cities put together.
So when it slows down, hopefully we will see some shift of launches into the under 5 crore. But okay, we'll come to that later. There is this whole, you spoke about influencers, and of course we also mentioned brokers. There is this serious feeling in this, that in NCR, the broker-developer collusion, right? The checks come from the brokers who underwrite projects, and they will underwrite 100, 150 units. They will go and tell the investors, just give us the money in 3 months, we'll help you flip it. Which some influencers have called as traders. These are all channel partners, brokers, right? Tell me how much of it is the truth, that's sort of an appetite. I'm also worried, and I'll be very upfront. And I do know that there are investors, whether you call them short term or long term, वो फितरत में है नॉर्थ इंडियन की, वो 2-3 घर तो खरीदेगा ही as soon as he comes out of wealth. So
right? There's nothing wrong with it.
So that flipping is happening, isn't it, Samir? There is
They're
a
making
lot of money, lot of inventory which is underwritten by brokers, right, for the developer to show the projects
So there
sell
is a
out.
lot of misconception.
And these are investors, because these 9,000 units have not all been sold to end users. At least we are
I'm not disputing
agreeing
that.
on
So
that.
please, let's break those numbers down.
Okay.
Right. So first of all, to understand the real estate market of Gurgaon, you need to understand there are 2 types of developers here now. One are the branded, really financially stable developers like the Godrej, DLFs, Shobhas of the world. And then there are some new developers that are coming, seeing the big opportunity. And I would not like to take those names, right?
If they deliver,
yeah.
they'll become big too.
So answer to your question
and
is,
trusted.
if you break this 9,000 inventory down into the trusted names, who do not encourage investors, who do not encourage traders, they have a lock-in period, so they don't even allow the apartment to be sold. And like, for example, if you talk about the top 2 builders, they take a very large upfront advance now to discourage investor buying or trader buying, and they are looking at your PAN cards, Aadhaar, blah blah blah, to not give one person 3-4 units.
So
right?
no trading
So
they
allow. They are not allowing.
But
that,
they're very
right?
open to investors coming in.
But
long-term investors.
Now define investors. Investors are good for the market. Long-term investors are good for the market. DLF has come out with a statement globally that their NRI audience has gone up from 3% to 22%. Now, what's wrong with an NRI investor being a long-term investor buying a product over here? He will either rent it or retire and come back and stay in it. He's not about to flip the product, right?
He may. After 2 to 3 years, he may also flip. But it's not trading. It's not a 3-month, 4-month
to buy that, right?
Okay. I have real proof, right, from my friends and family who I have become de facto sort of an advisor, or at least a bouncing board with. In SPR, inventory which was sold 2 years ago at 6,000, or 3 years ago, 2021, 5,000, 6,000. From the builder went to an investor. He flipped it at 9,000. Today, that inventory is available at 12,000 for the third buyer. And this has all happened in a period of 1.5 years, right? So here's my question. There is a large market, and I think that is where I'd like you to tell me, don't you see any stress in that market coming?
See, again, I'm repeating.
Because there is flipping. Today's secondary market inventory is available at lesser price than what the builder is quoting. And if you go to the builder, he negotiates us down to that rate.
So you're in part also answering my question, or your question is that there is a buyer. That's why he's being able
There is
to
a buyer,
it, right?
Yeah.
So there is a buyer.
Finally, I feel the end user is coming.
Right.
But
So
he's already seen the
end user
inflation
will
from
not come
6.5
quickly,
to.
right? End user is not going to come so quickly because the project is still 4 years away from completion. The end user comes in 6 months before completion. So there is maybe another long-term investor coming in, right? Or somebody who's missed the bus and maybe he's getting a slightly cheaper deal. Like for example, the NSE Sensex came down from 25,000 to 22,000 in the last 6 months. A lot of people bought, we're back to 25,000.
Okay.
So he's seeing an opportunity, he's seeing a minor dip in the market and he's grabbing that dip, right?
Okay.
So as far as I'm concerned, I would say, I would break this down into two buckets. 75% properties being bought by long-term investors and end users, 25% properties being bought by traders or flippers, as you may want to call it, brokers, whatever you want to call it. That 25%, out of which when 10% comes into the market and there could be some issues because the broker, flipper, trader may have bought 2 or 3 properties and may be having cash flow issues. That creates the fear factor and this rumors in the market is about to crash. So when you're looking at the overall market, which is say 100, if 4 units are coming into the market out of that 100 and they're not selling for whatever the reason may be, bad location could be one, could be that the guy is asking for a higher premium, could be any goddamn reason, right? The market is getting a bad name because of those 4 units. Right?
Okay. So you're kind of confident because there is no
evidence
whether it's 75%
it's
or
very
25%.
important to understand, Manisha, that the 9,000 units above 5 crores, 8,000 have got sold. So there is a supply-demand mismatch favoring supply because there is now, for the first time, absorption is lower than supply, but it's not lower by 50%.
Yeah. How much lower is it?
10%.
10%.
Right? But because people are not used to those numbers.
You don't expect this number to increase, let's say, in the next 6 months to 3 years.
So I don't know that. The market will determine that. Again, I'm coming back to the above 5 crore bucket and the below 5 crore bucket. It's a black box out there. Nobody knows. When that demand for 5 crore plus homes is going to come down, right? And when that happens, developers will stop launching because they will not find buyers.
Will be pain. So,
right?
so
and
can we say that this is now a market which is fully priced for investors?
Absolutely.
And clearly don't get it?
Well said. Well said.
So this is what, because there has to be a takeaway. We've thrown so many numbers and the investment party is over.
So like I said, you're absolutely right. I don't recommend any investor to buy at this price point. We've had price increase of 400% and I am going to repeat that not in 4 years but in 15 years. Okay, so please factor that in. Don't think it's 4 years. But now the price point that we are at, and especially in Gurgaon, because the average size is 2,600 square feet, it's not 1,300 square feet. It is not an investor market. Our price is going to go down? Absolutely not.
They won't
right?
go down.
They will not
and you are saying that, okay,
right? They will not go up in the pace at which they've gone up in the last 4 years.
I have a feeling they won't.
And they shouldn't.
Yeah.
They are already.
I don't think they will for the next
time,
2 to 3 years. I think we have, like in the stock market, now there are stocks trading at a 90, 100, 110 PE. I think we have exhausted the PE of Gurgaon real estate.
Absolutely,
of 5
but
crore and
see
above
where
units.
Gurgaon has come. Rest of India tier 1 city stands at an average weighted price of 10,000 rupees a square feet. Gurgaon stands at 20,000 rupees a square feet and Mumbai stands at 20,000 rupees a square feet on super area. When we talk carpet area, Mumbai is at 32,000 rupees a square feet and Gurgaon, because of its super to carpet area ratio, which is now unfortunately 54% and used to be 65% earlier, has come to also 30,000 rupees a square feet. So Gurgaon was a part of the tier 1 cities at 10,000 and Mumbai was at 30,000 and Gurgaon has suddenly come to 30,000.
That itself is saying that it's gone up too fast.
That level, it's become the most expensive city in India because of the size and price per square foot combined together. It has become by far the most expensive city of India. So it should stay there and stabilize there for the next 5 years. Let this small little inventory held by the traders, flippers go to the natural investors. Let these super luxury projects get built out, and then that will continue to be a market. Then after 5 years, that will be ready to go up again.
Up again. So it's a forward PE of 5 years for 5 crore and above. But I do believe that going forward from here, just the purchasing power of such expensive homes is not there. And I know you've said employment, you've said NCR, but let's see how it pans out. Well, I'm going to wrap out this discussion from the likes of a Delhiite who has lived and been a home buyer and a counselor for friends and family looking to buy homes in the National Capital Region, because Samir did give references of NCR. Now, I've been here for 25 years, and I must say Delhiites and everybody in NCR does like to show off, and we do it unapologetically. The bigger the better, the more flamboyant, the happier we are. We are hearty people with Punjabi in our blood, even if my surname is a non-Punjabi and a South Indian. We love to entertain, call friends and family, go overboard with our parties, food and entertainment. And guess what? A home is at the center of it all. And like Samir said, that's why bigger units are selling. Everyone, as they climb up the wealth ladder, wants bigger homes in this part of the country. Demand for Gurgaon. Again, I'm going to reiterate the point which Samir has made, because of the employment generation is not limited just to NCR. It's coming from Punjab, from Assam, from UP. Everybody who's coming here and working wants to own something. It's also coming from Delhi, because Delhi is not creating inventory. Again, a wrap out from what Samir pointed out. West Delhi, North Delhi, big, medium, small business owners who already have their cotis. Now the next gen want a condominium lifestyle with gym, spa, pools and the works. So yes, there's data and there is this personality of a North Indian. And I'm going to vouch for that. So data analysis by PropEquity says there is no crash imminent in Gurgaon market. There will be deals and bargains in secondary market. You can negotiate hard with builders. And if you're an investor, please don't buy anything expensive. Prices have run up too fast. But again, no crash, so no fear. Thank you so much for watching. Let's get real with me, Manisha Natarajan.